Good morning. Scott Dolch here, Executive Director, Connecticut Restaurant Association. I appreciate everyone here hopping on a call on early here on a Monday morning. I hope everybody had a good weekend. Obviously, the weather for those of you that had outdoor dining, definitely very, very favorable. And obviously, we're getting prepared here for Wednesday for our start of indoor dining in the state through guidelines I'll get to in a second. Also, I want to thank Stephanie O'Rourke from CohnReznick's. I'll go to the next slide here for spending some time with us today. I know, as I joked with Stephanie, I don't know how many. I think the word PPP, if I could maybe stop hearing it just for at least a day, would be great. But obviously, I know Stephanie with CohnReznick's has been trying to work diligently on Paycheck Protection Program updates, trying to answer some questions. And I really appreciate Stephanie. So Stephanie, thank you so much for hopping on here today with us.
My pleasure.
So before we get into the PPP side of things, I obviously have a couple slides and some updates for everybody to kind of share and help with any questions or comments. Obviously, the group chat, like always, that we use. If you guys don't mind, just making sure if you've got questions, you can use the chat box to send us questions throughout the presentation. So before we get to the actual heart or meat of the presentation, just a couple slides. Trying to not to get on a serious note to start. However, I heard some really disturbing news, unfortunate news late last week. A restaurateur, Paul Delane from the Stamford area, obviously lives in Westchester, unfortunately passed away last week. And I wanted to bring it up. Obviously, I didn't get a chance to know Paul, but I've had a number of questions, another number of calls and texts from folks that did know him and knew him very, very well. And I just I wanted to bring it up this morning. I know I've talked to some folks even earlier this morning just about what they've been going through and what everyone is going through. And obviously I can't be here to I guess the biggest point I wanted to bring up today is just to make sure everyone's just kind of thinking that there are resources out there, that there's people like our association, there's other restaurateurs that are here for each other. And I really wanted to bring it up because I think it's this is a time that none of us were prepared for, this challenging time that we're all facing, especially what you guys are dealing with. And I really just wanted to make sure you guys know, if there's anything anyone needs through this time, please reach out to us. I feel for Paul, his wife and his two kids, and hearing kind of the stories of folks that knew him really, really well. I know there'll be a viewing on Wednesday and obviously the service on Thursday, but I did think it was important this morning before we kind of got into everything with having about 80 or so of you guys on the call, to just bring that up. And obviously down in Fairfield County, more people knew him than up here, but in the Hartford area. But I just my heart breaks to hear the story, and obviously making sure you guys know anything you need, late night text calls, even just to talk to somebody. You guys know that I try to be there as much as I can and follow up when I can. But yeah, I know it's unfortunately, not just in our industry, but across the board. So I wanted to bring it up. We're going to try to do a little bit more as an association as we kind of move through this to continue to communicate and talk a little bit more. But yeah, so tough news and thinking about him and thinking about a lot of you guys that did know him and knew the family well. So just kind of moving on, just a couple slides that I really wanted to talk about again, just to reiterate as we get ready for reopening. Just one quick reminder with the DECD, if you received your badge or you signed up for your badge in phase 1, you do not need to do it again in phase 2. However, if you did not open for outdoor dining, you'll need to go on their website. If you go to ctrestaurant.org, you can see the link. We have the link there to get to the DECD website to fill out the badge information. It takes about, I think, a little less than 2 minutes, and you'll be sent the graphic that you can put up in your window if you want to. It's not mandatory, but obviously just to be certified that your business is certified in the COVID-19 era, as well as the Connecticut Restaurant Promise. I know Yvette last week talked a little bit more about this, where continuing to get restaurants to sign up every day. It's our best practices for our association, for all the restaurants getting back reopened. We're continuing to update information, but if you do sign your restaurant up, it takes a couple minutes to do. There's no cost to you, whether you're a member or not. We then will send you and mail you out. We've already sent out the first round of packets. Connecticut Restaurant Promise posters, infographics you can put in your windows as people are entering in, just to kind of walk through the promise you're making to your customers, and then obviously the promise that you're asking of your customers to you. So, and then we'll have the window door cling will be mailed as well. So the whole packet is already been mailed out. We're going to do another round of that this week. So if you haven't signed up for the promise, please do, so we can make sure you can get your packets and decals. Thank you for Yvette for putting in the chat the website to sign up to take the pledge. ServSafe information, as you guys know, as we continue to move through with ServSafe products, they still have, which I highly recommend for you and your staff, their ServSafe reopening. So those 3 videos down at the bottom, obviously with reopening, to have your staff and yourself take a gander at that and watch the video to kind of go through some best practices coming out of ServSafe out of DC. As you guys know, ServSafe manager trainings, we had to put it on hold a little bit throughout this pandemic because of teaching classes of 35 in person was just not attainable, and still a little bit of a challenge with the gathering size limits. But also ServSafe's kind of worked with us to try to find new ways to still allow you guys to renew your trainings or to add new trainings for your staff. So kind of in this next slide, and if you go to ctrestaurant.org/ServSafe, you can get all this information. But what we're doing right now is we're allowing, you can do a full online course at your leisure. So obviously you don't have to go to a full 6-hour class and go through the process with, even though I know with Nikki and Dennis, they've been great. But for the time being, you can do the full online class as 6 hours plus when it works in your schedule. You can do it in English or Spanish. And then what you do is you still have to have the test proctored. So you would come into our office in Farmington. We're scheduling in-person proctoring. We're actually working into Fairfield County, New London County, and New Haven County to try to find some locations. If you guys have a larger group or people that want to get the certification, we can work with you to bring Jennifer Conklin-Smith on our team down to help proctor the exams. And what you do is, you just have to bring in an iPad, Amazon Fire, or a laptop. And what you do is you take the test in person. It takes a little less than 2 hours. The average time is about an hour actually to take it on a digital format. And the benefit of doing that, as opposed to the old paper test, as you guys know, we had to mail them back to Chicago. It took at least a week to get your answers back or not. You find out in real time whether you passed or not. And then typically you also have the opportunity to get a print off on your way out the door. So just kind of the updates with ServSafe, because I know there's been a lot of people asking, but obviously making sure you kind of reach out to us or use our site to sign up to take the classes. All right, 2 other quick things before we get into with Stephanie. I've been working diligently with David Lehman, with Commissioner Lehman. I know we had our call last week to kind of go through the indoor guidelines. There are 2 changes that are going to come out of the guidelines, hopefully later today. They've just been working through, but the biggest question we got as we talked about the bar height and the bar barrier, non-porous barrier, and what that means and what you can do and can you serve behind it. So this is updated language that we should see into the guidelines that'll be fixed later today. I'll read them for you. The first bullet is the same. Bar seating is permitted provided that either there are no active work areas or working staff behind the bar. This second bullet is what has been updated. Or there is a physical barrier, example, plexiglass, separating customers from the bar space that is at least 30 inches high, which is consistent with the barrier that's needed behind booths or banquettes. That is that 30 inches from the table height, which obviously the bar height is that table height, so 30 inches high. But the new language is, and a gap opening at the bottom of the barrier is allowed for food and drink service as long as the gap opening is no more than 8 inches high. This is obviously something that Commissioner Lehman brought up on our call last week, and we tried to get some clarity, and we're going to get it into the language. So what that means is you can actually put a piece of plexiglass on your bar in the inside frame for your customers to sit in, and there can be a gap from the bottom up that's 8 inches to serve plates, pint glasses, everything else. Your bartenders can actually work from behind there, and then you would need the plexiglass from the 8 inches up to 30. So really a 22-inch piece of plexiglass would go across and you have a frame, if you guys think about it that way. I don't have any initial photos, but I think this is actually a really big win for us in the sense of some other states, in the sense that you're able to serve from behind the bar. Your bartenders are going to now be able to work, obviously keeping their mask on and that protection, but they're going to be able to be, able to serve their guests inside. Obviously, I know there's a cost. There's a lot of other side questions I've gotten on this of, does it have to wrap the entire bar area? What about a service station part of the bar? All those, just understand the 6-foot spacing. If you have a couple that comes in to sit at the bar, they sit down at the end, they have that plexiglass barrier with the gap in front of them, and then if there's a service area where there's servers and other people come up to the bar, that just needs to be 6 foot away so you can have breaks in your barrier, but obviously understand your town's going to have to help you approve this. But I just wanted everyone to know, because there's been a lot of questions since Commissioner Lehman's comments last week in our webinar. And we've been fortunate to get these guidelines updated. And the same thing is, you don't need barriers in between your guests and parties. You just need 6-foot spacing between. So if you have a group of 4 that comes up, they all want to sit at the bar, there's no 6-foot spacing parameters around them. Their chairs can be on top of each other. It's just that next party has to be 6 feet away. So I'm hopeful that that kind of new language, this gives some more clarity for the town specifically and what you guys are building. Obviously, if you're not going to use your bar at all, you don't need any barriers. If you want to have your bartender back there working, but if no one's seated at the bar, you would not need the barriers. It just gives you guys an option. I understand the cost. I understand the challenges, and I make sure you guys understand that too. However, please know that phase 2, there was no bar seating at all about 2 weeks ago. So this is an option for you as we continue to work through June into July of possibly using the bar that you have inside for your guest. The only other change in the guidelines is for performers. It'll be outdoor only for phase 2. So you will not be able to have performers inside, even if you've had that in your restaurants before. They want to keep that outside. So that was something they forgot to put in, outdoor only, into the guidelines, and that'll be fixed as well. But those are kind of the 2 parts of the indoor dining piece that we're going to see leading into Wednesday. So I know you guys are building stuff out or working with your contractors or stuff like that of what you want to do with your bar. I'm hopeful that this language gives you guys some clarity as we move forward. Last bullet I have is on the job board. We talked about this last week, making sure that you guys know, the biggest part of this is we're continuing to try to market this and promote this. I know you guys use Indeed and other platforms, but we feel like, the CRA should really help, looking for people posting jobs and everything else that revolves around the job postings without having a cost. So if you're a member, it doesn't cost you at all to post your positions. And we're going to continue to use social media and other platforms to promote ways. And obviously there's one on there already, but there's been a couple that have been added. Obviously, you see kitchen lead chef at the Cambridge House Brew Pub in Granby. So please reach out to Yvette and our team and Emily if you're looking to post a job. And Yvette is on top of it today in the chat, ctrestaurants.org/jobs. All right, I'm done talking for now. I'm going to turn it over to Stephanie to talk. I have her slides up a little bit to kind of give everybody the lay of the land of the PPP side. So I know Stephanie's got a little bit words on here, but she'll kind of walk you through kind of where we are. So Stephanie, thank you again for the time and for being on. So Stephanie O'Rourke is the head of hospitality emerging brands leader at CohnReznick, based out of Atlanta, where she's housed. But she's been working diligently for the last few weeks, having specific webinars with CohnReznick. We're excited to have them as one of our partners here, and to have Stephanie on, and she can hopefully answer as many questions we can hopefully answer today for everybody with their PPP loan. So Stephanie, I turn it over to you.
Good morning. Thank you for having me. Yes, and Stephanie O'Rourke from CohnReznick. And yes, I run the emerging concept division and financial and operational consulting for our hospitality practice on a national level. So I do have clients actually in Connecticut as well. I am housed in Atlanta, but service clients all over the country as well as internationally. And I also head up, along with my partner Don Stevens, we are co-leaders of an SBA task force. We have about 50 individuals who are concentrated on SBA relief for all industries, but we both happen to do a lot of our work in the restaurant business. So Paycheck Protection Program, the Flexibility Act of 2020, that came about from, quite frankly, a lot of lobbying, which I was involved in for the restaurant industry and, overall the hospitality, restaurant and hotels because of all the shelter in places and social distancing. It just wasn't feasible for restaurants to spend the money within those 8-week period of original time period. So when you got the money, whether you got it early on or even if you got it a little bit later in the game, it just wasn't feasible. So a lot of the Flexibility Act is really positive for the restaurant industry. There's a couple of definite game changers here that I believe will, and once we get a little bit more clarity from the Treasury and the SBA, we'll understand how it's going to affect overall people who received a PPP loan. So, first and foremost, extended the cover period on when about the spend from 24 weeks after loan origination or December 31st, whichever is earlier. So from the original 8 weeks, it extended to pay over the 24 weeks. I've had a lot of questions from people, and I'm going to try to answer questions as I go along. But I do that I've known that some of you might have. A lot of people thought, oh, can I pick an 8-week period of time within this 24 weeks, or can I, when does that 24-week time clock starts? And it is date of when you got the loan origination, which is really when you got the funds. And it is the 24 weeks. It's not, all right, well, I'm probably opening in, I'm opening up my restaurant in 5 weeks from now, so I'm going to start then. They gave the 24 weeks because they thought that would be enough time. The Treasury thought that would be enough time for operators to be able to, open up and spend 2 months worth of money in, virtually a 6-month window. The act pushes the expiration date for the cover period from June 30th to December 31st. So a lot of when, they talked about the forgiveness provisions and the cure period to get FTEs back to where they were pre-pandemic, as well as salary reductions, where you had that June 30th date. Now that cure period goes to December 31st, where there was a 75-25 split as it pertained to forgivable costs. That 75% had to be for eligible payroll costs and 25 could be for non-payroll costs. They switched that from 60 to 40. So from 75 to 25 and 60 to 40. And that really came from areas, a lot of lobbying where rent, you had some cities, operators where their rents were on the higher side, and where that would have been an issue. And then also, getting enough people back to work, getting their staff back to work. So there was some chatter right when it came out on June 5th that there was what they called the cliff rule, where it was going to be if you got a $100,000 loan and you didn't spend $60,000 on payroll, that you were going to get no forgiveness at all. And that's not the rule. It is very similar to what it was before, meaning that you are limited outside of potential reductions in forgiveness, but you are limited to your forgiveness that it has to be at least 60% of your payroll costs. Meaning, if you got a $100,000 loan and you spend only $50,000 on payroll costs, and you spend $50,000 on non-payroll costs, you would be limited. Actually, your total forgiveness amount would be $83,333. So $333, which means it's basically taking your $50,000 of payroll costs, dividing it by 60%. So that's something that when you're spending the money, and you have to be cognizant of that 60-40 split. I know that there are a lot of, when everybody got the money, the landlords were clamoring, down your throats to get the money. Get the money. I see that there's a question I'm going to get to. Does the FFE still apply? I think you mean the FTE still apply. And yes, FTE still apply, but I'm going to address that a little bit later. So the new act establishes also that there's an extension on the minimum maturity. It was 2 years, now it's 5 years. And those are for loans after June 5th and after. So if you do have a loan, which I'm sure the vast majority of you received your loans prior to June 5th, you can mutually agree upon with your lender to extend that maturity out. So I would encourage you, if you believe that there's going to be where you potentially might have money out there after the 24 weeks of spend, that you do reach out to your lenders now to get that in place, that you want the extension of the maturity date from 2 to 5 years. The interest rate is still the same. Again, it extends the deferral period as well for borrower payments of principal and interest and fees that are not forgiven. So previously it was 6 months to not more than a year, as mutually agreed upon by you and your lender. And now it is, it's 10 months. It's the date that the SBA remits the borrower's loan forgiveness amount to the lender. And if the borrower does not apply for loan forgiveness, pretty much 10 months after the end of the borrower's loan forgiveness covered period. So 10 months after that 4-week period. Can you change the slide? Oh, Scott, can you forward? Okay, great.
Oh, yeah.
No worries. No worries. So, so let's talk about, and this to me is the big game changers, the full-time equivalent employees that everybody was extremely nervous about. How were they going to get all their people, back to work when they were closed? Either they were closed or their business was a mere shell of what it was because of, again, social distancing, health and human services, the various requirements that you are all under to meet as it pertained to, opening up your restaurants. Some of you were primarily delivery, and you just didn't feel like there was any way you were going to get staff back by June 30th. Now you have the time to get them back by December 31st, but there definitely might be some people, depending upon, I have plenty of clients that quite frankly are in fine dining, and they don't plan really on opening until September. And so they're not spending the money, and even though they got 24 weeks, they are really still not spending, they're spending the money in a very short period of time, and are nervous that they're not going to get their rehires back. So they did put in additional, what they call safe harbor measures as it pertains to the, rehires and restoration of wages. The restoration of wages is if you get to December 31st, and that rule was basically your employees had to be making at least 75% of what they were making in the first quarter of 2020, first full quarter of 2020. So if somebody was making $1,000 a week, they would have to be making $750 by December 31st. So if you have a situation where your business is not where it was pre-pandemic, you would have to, look to, their wages, their tips, what are they making, and compare it. And so, hopefully by December 31st, everything will be back to as close to the new normal as it can be. And that really won't be a problem, because you'll have the employees that are making the tips, and, your businesses, knock on wood, will be where they need to be, or close to where they need to be. So you'd be paying people that 75%, at least 75% of the wages that they were per se making pre-pandemic. 2 other provisions, or really 3 other provisions that they put in, that if, with respect to the restoration of your FTEs, which I will say we do need some more clarity on when they come out with the new rules and the new application for loan forgiveness. So if you're unable, in good faith, and you document you're unable to rehire employees who are employees on February 15th, 2020, and you're unable to hire similarly qualified employees for unfilled positions. So obviously, if there's a certain skill set, I'm going to use a very, if you are a sushi restaurant and you have, obviously that's a sushi chef is going to be a very specific skill set, and you can't fill that position, or a similar qualified position, then they understand that that would count as if you brought that FTE back. The one thing I think the most positive of all this, yes, the 24 weeks is fantastic, and yes, the the 5 years, if you do have money left over, is terrific as well. But I think the big game changer to me for companies where when you're unable to return to the same level of business activity as such recipient was operating before February 15th. So if you have to put in measures, and the same measures that Scott was just talking about, the standards of sanitation, social distancing, in order to keep your workers and customers safe, and that is prohibiting, capacity issues, and those are handed down by whether they're OSHA, the Health and Human Services, or CDC, and those are causing your businesses to, your revenue to be half or a quarter or 75% of what it was pre-pandemic. That might be our what I call the get out of jail card, where FTEs may not matter. That might be a situation where FTEs might not come into play. Obviously, we need further clarification on this, but I think what's really important to note here is that, so, how are they going to measure it? I would be safe to assume they'd measure it by your revenue levels, because honestly, across the board, this bill is not just for restaurants. It's a one-size-fits-all for every industry. So you'd have to believe it's going to be something that's consistent among all companies, which is obviously revenue. So we don't know the percentage of revenue that you have to say is down. With that threshold, is it 50%? Is it 25%? Is it, we have no idea. At this point, obviously, we're waiting on some additional guidance from the Treasury, but I do think it's going to either be like I said, a get out of jail card where it's not FTEs, which I know everybody was concerned about would not be a factor, or maybe it's going to be a percentage where if you reduce your workforce, if you had, as of February 15th, you had 100 employees, and that was your goal, you had 100 FTEs, and that was your goal to get back to those 100 FTEs. Now maybe, and your business is 50% where it was, maybe you only have to get back to 50. Again, and you do have to December 31st. I've been asked a lot of questions is when we have these safe harbors, whether it be June 30th or December 31st, where do we stand in so much, to consider somebody an FTE? And quite honestly, the way that they did the application, they were measuring FTEs on a weekly basis. So if you brought somebody back, a week prior, and they're working the required, 40 hours, they would be deemed I guess they would be deemed an FTE at that point. I don't know if they're going to issue additional guidance. I do know, and I'm sure you're all aware of, there's been a lot of, throughout this whole PPP process, there's been a lot of what they call frequently asked questions, just to get additional guidance so we could better understand what they mean, based on all these regulations. And there's about, on the loan forgiveness, there's about 35 questions that they've received that pertains to loan forgiveness and pertains to just, the application in general. It will change the application, but there's going to be a lot that's going to remain the same. And those have not been released as of yet. So we're hoping that within the next couple of weeks, they are going to release those, and the FAQs, those questions and answers to questions I'm sure that many of you have as well. They're pretty common, and we'll get some further clarity. Also, on the confirmation that June 30th remains the last day to get the PPP loan. Applications can be approved. So people thought it was going to be after that. It's still going to be June 30th. They're not increasing the funding. There is about about $130 billion still left in the program. There are a lot of companies that decided not to do it or gave the money back because of some of the eligibility requirements. But now that I think with the extension, there's going to be somewhat of an uptick of some people going to get the loan, some companies, and obviously they're in a much better position than people who applied on April 3rd, the first day that you could apply. Another advantageous section of the Act is the deferral of the payroll tax payment. So the employer share of Social Security, the 6.2% that you are all paying on employee wages and tips. So that period, that was a deferral from any payroll, any Social Security tax payments that were due from March 27th to December 31st. That was going to be deferred, 50% to be paid at least 50% at 2021, and the remainder December 2022. The original act said that you could, as soon as you received loan forgiveness, if you had a PPP and you received loan forgiveness, you could no longer, you had to stop deferring. The new act lets you, it's irregardless whether you get PPP, whether you get forgiveness or not, you can defer those payroll tax payments. I want to make note again, the fact at the end of the day, it's not even an eligible cost, the Social Security. So it made all the sense in the world that you should be able to defer that cost. So that's something that, again, I would encourage you all to speak to your payroll companies to make sure that they are taking advantage, if you choose to do so, that you're taking advantage of that deferral, because you will have to reach out to your payroll company and get that information from them. So I know we had a couple of questions in advance, and Scott, I'll leave it to you. Do you want me to go through the questions that were sent?
Yeah, I mean, I think, no, it's just thank you, Stephanie, for kind of going through that. I think before we go into probably some of the weeds of all the questions, you talked a little bit about the FAQs and kind of things we're waiting on. And obviously they issued, as I make the big joke that they call it the interim final rule, but they have 17 versions of it now.
It's an oxymoron.
Yeah. So what are some of the big things that you're hearing that we're still waiting from SBA and Treasury to provide clarity, or will we receive clarity on the folks that kind of are in their loans right now? I guess would be the first. Are there like one or two, or like, what are some of the things are like, hey, this final rule did not clear up this yet, and we're still, what are some of those pieces that you feel like we're still waiting on?
Okay, so with respect to the cure, like I said before on the FTEs, when would they be deemed an FTE, right? At that point in time. Yep. I think, when you're trying to cure, when you're trying to get back to the FTEs, part of the cure is if you've reduced your FTEs from February 15th through April 26th, which was 30 days after the CARES Act was enacted, you would need to restore that. So, and the question always is, well, when do I actually have to bring people back? Another question is also that people are waiting to answer is, many people have reached out is, the same thing with the reduction of wages. When do I have to, when would that be reduction of wages come into, when have I got, is that last week of payroll? People ask about, all right, well, now I have money left over, right? Maybe I didn't spend all the money, or maybe I wasn't able to spend all the money, and I have money, because from a business perspective, it just really didn't make sense for me to privatize unemployment. So can I do whatever I want with that, with that money that's left over? Can I use it for other purposes? When you got the loans, you certified that you'd be using them for these eligible costs. Now look, at the end of the day, you're always going to have payroll, you're always going to have rent, you're always going to have utilities, right? So those are, and money is fungible, it's fungible. So you're putting this money, so to really decipher, to really decipher, what money is paying for what at that point in time. But those are some of, the questions. What is transportation? When they talk about utilities, what does transportation? And again, this is a one size fits all. So does transportation utilities mean gas if you're a trucking company, right? Sure. Things of that nature. There are also, people, with the review of the loans, what is actually, I thought they did a pretty good job about what the review process is, but really you have to hold on to the, all the documentations for 6 years. And so, does that mean, 6 years down the road, they come back to me and find, and I think I've done everything right, and my bank has come back to me and given me forgiveness and something, and then all of a sudden I have unexpected debt because they're saying, something was wrong with my application. So, what is really, truly the timing, because I believe the SBA is going to contract the review process out because they just don't have the manpower for the amount of loans that were issued to really go out and do the auditing themselves. You know, there's a lot of, look, there's a lot of different, you know, what we talk about, you know, it's 24 weeks now. So when it was 8 weeks, a big question because the timing of when you received your loans, you could have the incurred and paid, you could potentially have gotten, I have a bunch of clients that could potentially have gotten 10 years, 10 years of a 10 period, 10 weeks, I'm not sorry, 10 years, sorry, 10 weeks of payroll in there, you know, and in lieu of the 8 weeks. I don't think that was the spirit, but, you know, it was incurred and paid. So, you know, would that have been allowed? And I know a bunch of you have probably gone back to your banks and asked them questions, and they usually say, oh, go back to your CPA, because they have the same guidance that everybody else has. They don't have a leg up on this. You know, you'd think they would, because they're the ones that are going to have to do the loan forgiveness applications, but they don't. So, you know, can I let go of everybody? You know, what happens if you know, now it's December 31st. What happens if my business, you know, I've spent the money, I've got everybody back, I've done everything possible, right? Now, January 1st comes and my business is not where my business is not where it was, and I decide to let go of a bunch of people, right? Let go of half of my staff because it's just not working. You know, unfortunately, it's just not working out. What are the ramifications of that? You know, and I have a loan that might be big enough where it might be under scrutiny by the, you know, SBA review. So what are the ramifications? Because a bunch of people told me, yeah, you know, I'll get it June 30th, and then I'm going to have to let everybody go. Because once it's on my dime, I'm not going to be able to you know, afford these people. So those are some, you know, some of the questions that, you know, people are trying to get a handle on, and obviously properly plan out how they're going to spend the money and when they're going to spend the money.
So Stephanie, another question from your side that I get a lot is, and I'll go through some other questions as well. I know some people put questions up, so I appreciate it. So what advice do you give right now that someone is 6 weeks into their PPP or 7 weeks into their PPP that they've signed with the bank and everything else? Like, they're asking, you know, do I need to do an amendment, you know, addendum to this? Do I have to, you know, to make sure that they know it's 24 weeks and how I'm going to do that? Like, what are you hearing, or what advice do you have with their banks?
Yeah, I think it's, you know, it doesn't hurt to be in communication with your bank. And again, like I said, I don't know how much the bank has, you know, has guidance on it, but you know, this supersedes the 24 weeks, supersedes the 8 weeks. But if you do choose, you can choose. If you are in a situation, and I do have, believe it or not, I do have some clients in the restaurant industry who do a tremendous amount of delivery. They were in a situation, or they were QSR with drive-throughs, where they were able to spend the money in the 8 weeks, and they don't need the 24 weeks. So if you choose to remain at 24 weeks, you can go back to your bank as long, and you know, after your 8 weeks are done, and say, I want to ask for forgiveness. I don't think the banks are going to take any loan applications, and they don't even have one at this point until after June 30th. Okay. But I don't think there's any communication. You know, the assumption is that, you know, this 24 weeks superseded the 8 weeks. So I think they should be fine.
And then the other question I get on the December 31st date that's there now instead of June 30th, people obviously, the majority have already received their PPP, and they're like, Scott, when I run out 24 weeks, I'm looking at like the first week of November, you know, or the last week of October. What does that mean? Is that just can I have to hit my FTEs beyond that to the 31st, you know, in normal pay that I'm not using? I'm just for the 24 weeks that I'm paying my covered period. But right. Is there a difference? Like if it's November 8th, let's say, is the last week, or just throw out a date, like they have to pay and use their loan money, but is their FTE counting portion, which we obviously still need some clarity on, are they going to be looking at December 31st, not November 8th, I guess?
Right. So if you're doing, you know, you've gotten your FTE back. So if you're satisfied where you've gotten your FTEs, you've spent the money, you've gotten your FTEs back to where, you know, where they should be. You don't, we'll see what the guidance on these safe harbors, but you spent the money, you've done everything in your, where you believe you're going to get full forgiveness. There is no reason why you can't go to the bank and ask for forgiveness at that point in time where, you don't have to wait to the December 31st. Now, again, that additional guidance on what happens sort of after the forgiveness, because what if you're in a place where you might let go of people after that, right? Because that's the only thing that's, what would really happen, right?
Mm-hmm.
The two things that would happen would be that you let go of people after that November 8th date that you used, or you may reduce salaries, based on that, because your business is not where it was within that, that time period. So that's, that's really the question is, we're waiting for some guide, but your 24 weeks is your 20, once it's over December 31st, you don't have to wait. I mean, if you're done after, 16 weeks, depending upon your business, I would go back to the bank and, just because you had a 24-week period. And that's interesting when it's going to be very interesting. And that's another question, going back to the FAQs, because when they did the 8 weeks, everything was measured in 8 weeks. So when you looked at your FTEs, you had your average FTEs over your covered period, which was the 8-week period of time. You divided it by 8, right? To get to, you took so if you hired somebody halfway through and you thought that they were, as a full-time, and you thought they were full-time, a full-time equivalent, you really only got credit for, half, because you brought them back because you had to divide it by 8. So
Sure.
It's going to be interesting to see how, because not everybody's going to need that 24 weeks, and how you have to measure it. And that's until we get the application, we're not going to know. We're not going to know until that application comes out and the new rules on the application come out.
Okay.
So those are questions, I think, from, additional guidance. And again, like I said, I'd stay very close with your bank and just understand, because look, at the end of the day, they're the ones that are going to have to go through the process with you. And you're going to have to, they have certain interpretations, and obviously you have to follow their interpretations. I know one of the questions is, is do we follow the SBA? Do we follow the bank? It should be the same. I know everybody experienced during getting the loans. If you spoke to different banks, they were interpreting it one way. One bank was interpreting it one way, another was interpreting it another way, and it was really confusing for people, and it was a terrible, terrible process. We're hoping that from a forgiveness perspective, it's very cut and dry, it's very clear cut, that every bank, it's standardized, right? Because obviously that would be extremely unfair if one bank was allowing something and another bank was not. And it's just, the unlucky, luck of the draw that you got, you were the unlucky recipient of that bank. So
Sure. Question on the 40%, and I know there's not probably a full, has anything changed on that, Stephanie, from what you've heard or seen? Like exactly, I know it was rent, mortgage interest, and utilities, but is anything, like, is there any more clarity into, or are there added things in the 40%?
No, nothing was added. It's still, nothing was added. I know the Republicans at one point, they talked about doing PPE, and then there was also talk about, as well as, allowing that 40% for reopening expenses, so it might be for you guys, inventory and whatnot, and supplies. But there's been no revisions as it pertains to that. Those non-payroll costs still remain the same.
And then is there there's a lot of questions I get, and I see one that Nancy's asked on here about what defines utilities. Like she wrote, does bug control, garbage pickup, so security systems, anything like that count towards utilities forgiveness? Or
again, I feel like, I'm a broken record. Additional guidance, it wasn't noted. It wasn't noted in the, whatever was noted is, so those, typical utilities, there was a lot of questions about internet. They included garbage removal. I know that you guys consider that, somewhat of a utility. Again, that's a question for your bank. Would they let you include that or not? Because again, if you include it and you don't get forgiveness, that would be a shame if you could have spent it on something, on something else. So again, that's also part of, some further guidance, because this is a one size fit all. So the government just, they're not looking at each specific industry and saying, what would the restaurants deem a utility as compared to what a construction company or a trucking company consider a utility.
Sure. And then Phil, I think I can answer your question. Do we know how much money is still available? I think we'd say 100.
Yeah, I think it's 100. It was, as of last week, $130 billion.
Sure.
Was still left out there. And
And
if there's anybody, you could definitely share my contact information, but I am working with a company that is an agent for the banks, for a couple of banks. And so for my clients that have been really late in the game, he's been introducing them to banks that are still, actively participating, and he gets paid by the bank. So there's absolutely no cost to the operator. So unless if you have a banking relationship, that's terrific. But if there's a need, we could definitely make an introduction for you.
A question here, Stephanie, from Scott Smith. He's saying, is the 24 weeks continuous? I'm assuming it probably is. He said we reopened and then we decided to keep it closed, and they're now going to open midsummer. So it's still the origination date, 24 weeks from that. You can't freeze it. Okay.
Correct.
I thought. Holidays. I think there's a couple of questions I see on here that are kind of FTE driven, and I think Stephanie did a good job of kind of answering those questions, like when my covered period ends versus December 31st. I would agree with Stephanie. Obviously, we need guidance, but I do think the loan forgiveness form, and when you close out your loan, like I don't think they're going to come back. I would hope not. Stephanie, you could kind of say maybe I'm wrong in that, but like if you got back to your 100 FTEs that you used as an example, and you finished your loan on October 18th, and you closed out your loan, you figured it out as all forgiven, and you move on, do you still think that the SBA or the government's going to be trying to come back after you if you had to make a tough business decision after that process, if it goes until December?
Yeah, that's one of those $1 million questions. What happens if you decide? And again, I think this unable to return to the same level of business activity is a huge game changer for specifically the restaurant industry. Because again, if you just, based upon whatever the rules and regulations are in Connecticut around social distancing or things that you have standards and regulations that you have to put in place in order to run your business, I think that's sort of, on the FTE side, I think that's how they're addressing it. So FTEs, which were probably, the biggest concern out of everyone's is, may not be, after all, a big concern once we get further guidance. I think, can you read Jessica's question? Because
sure.
Somebody asked, can I please answer Jessica's question? I don't know what it was.
If the FTE ends up applying, can I count myself as one of the full-time employees? I applied for PPP, have part-time employees, and used a Schedule C for my wages. Would I count as one of the FTE?
So the way the application works, if you go through the application, you would not be deemed an FTE because they kind of put owners to the side. Are you a full-time employee? You're probably the number one. You're all the number one full-time equivalent employees. But the way that it is shown, is, owners' compensation is like to the side, and you wouldn't be on that, on that schedule. So I don't believe you're deemed to be an FTE. What this is, this was meant to bring employees back to work, which is why it's so focused on that FTE. I think there was a question, related to, and maybe because I guess I could go through the chat and go one by one. I know we had some questions prior to that, but.
Yeah, no, I'm kind of going through them right now as we.
Oh, okay, all right. I'm going to leave it to you to go through it, but I do want to answer a question because I know owners' comp is a big question that many had, and they really changed the rules on it. Everybody thought, okay, I'm limited to $100,000 and on my comp, but then my medical and, my retirement, that's all my pension contributions, companies, that all comes into play after the fact. They completely changed the rules. in so much as, what was considered on the way in and what's considered for forgiveness on the way out. And they were trying so there wouldn't be bonuses taken by ownership, and they wanted to limit it to that $100,000. So it's for the amount to be forgiven, whether you're an S corp, whether you're a partnership, whether you're a C corp, whether you're a Schedule C, you are limited to Schedule C is a little bit different. So Schedule C and partnerships, general partners are a little bit different, but in the calculation, but you are limited to the lesser of 2019 or $100,000. So the lesser of, so if you had somebody that was, if you're an S corp and you had 2 owners and one person never received a paycheck before, and they were really, because they're a limited, they're a limited partner, you can't start putting them on payroll. That's what it's not the spirit of what this is. So, and if you were making $80,000 last year, then you prorate that over, over that period of time, annualize at $80,000. You can't make more, and you're limited. Your whole package is $100,000. That's your whole package, is $100,000, including any pension, any health insurance. So they're limiting ownership to $100,000. Or the lesser of that, or or what you got in 2019. So that's really important, and there are specific computations as it pertains to if you're a general partner. You are limited to your self-employment income. So we have situations, which is line 14A of your K1. We have situations, and this is further clarity, where they might have gotten a guaranteed payment, they've got their health insurance and whatnot. That would all be subject to self-employment, but their company might have had a loss, right? So they might have had a loss, and maybe it's depreciation. You were profitable, but you had a loss. So your self-employment income, might be negative. You might have a loss. And so does that mean that you are no longer, because you no longer are eligible to even have to take this money because it's the lesser of it, or to be forgiven? So that's another question that many have had, because it's a little bit different, because it's really not fair. Because if you're an S corp and you get a paycheck, but you have a loss and it's not subject to self-employment income because it's an S corp, well, that's not fair. Well, they get to take their salary, but somebody who's a general partner, just based upon their ownership structure. So again, another clarification that we need from the Treasury and the SBA. Scott, you want to go through?
Yeah, no, that's great, Stephanie. So are FTEs based on 40 hours or 30 hours?
40. So it's really important. If FTE still is a factor, it's really important that you understand your FTEs and what computation you use. So there are 2 computations. There's standard and then there's simplified. Standard is you take, what you first have to do is go back and you look at 2/15/2019 to June 30th, 2019. You look at those average FTEs over that period, or January and February of 2020, what those average FTEs, that's your denominator. You look at those. Now, if you have a bunch of employees, because that's your that's your first benchmark before the cure. So if you look at your FTEs, you want to make sure that obviously that denominator is as low as possible. So if you have a bunch of employees that work 35, under 40 hours, 35 hours, 37 and a half, or, then you should be using the simplified method. Simplified method is basically, if you work 40 and over, you're 1. If you work under that, you're 0.5. So if you really chart it out, right, and try to optimize your FTEs, you might be in a situation where you bring back a bunch of people and make them 40 hours, right? You bring back all your people, you make them 40 hours, and you might have to bring back virtually half the employees that you previously had in those 2 periods. So that is something that you really need to understand, what your starting point is on your FTE and what your goals need to be within that 24-week period. Again, FTEs may not be a factor, might not become a factor, if the business is, if that one provision, comes into play and it's our get out of jail. But that's something that's really important to understand, because that's your comparison. And it's also to compare what you were at 2/15, because in order to cure it, you look at your FTEs, what they were at 2/15, and then you look at what you reduce them. So if you were at 50 FTEs, right, and you were 50 FTEs at 215 and you reduced it down because you shut down and you reduced it down to virtually zero, the rule is you got to get back to those 50 FTEs. Now, if you can compute them two different ways, now you have to be consistent in your computation. So whatever method, you have to use the same method in whatever computation you're doing. But it's really important for you to understand what's your best bang for your buck on that, because that's where you want to get back to.
That's great. Thanks. All right. So obviously in our industry, and I'm sure you get a lot of questions on this, just about how they got their 2.5 times. They counted the tips or that average.
Yeah.
So one of the questions are tips that are run through payroll going to be forgiven, seeing that they were used in the original calculation?
Yes. Yes. That's part of eligible payroll. So tips in, tips out.
Okay. The second question, and I think I can kind of answer this. Can you use all the money just for payroll? Or do you have to use 40% to rent utilities? I believe you can use everything for payroll.
They'd
right?
be thrilled if you used it all for payroll.
Yeah, that's right.
Your landlords might not be, but yes.
Another question, can the PPP funds be used to pay more than 3 months of rent? I would assume yes, because you're looking at 24 weeks.
Well, now you're looking at 24 weeks, and that's another question. Now we know you can't prepay things. So you can't prepay things. A couple of questions that have come out, like, can I do retro? So whether it be retro, retro rent. So like, if I didn't pay my March rent, can I go back and pay my March rent? Again, I'd like to believe you could, but if it doesn't fall into your covered period, that might be, that's, again, we're waiting on clarification of that. I mean, look, at the end of the day, the way this really worked out, if you do the computation, you took 2 months worth of payroll, which is really, it's more than 8 weeks. It's slightly more than 8 weeks worth of payroll. It's almost 9 weeks of payroll when you divide, 2 months, when you look at the 2 months. So and then they gave you an extra 0.5, which was to cover rent, utilities, mortgage, interest on mortgage, interest on debt. So that's really an 80-20 split. So with respect to, now that you're getting more, more period of time, and again, we have to wait for the additional guidance, but there really shouldn't be, if you're pretty much open within those 24 periods, weeks, you shouldn't really have a problem spending the money, because you got a way longer period of time to spend it than the original 8 weeks.
Perfect. Stephanie, I have a question that's not on here, but I've gotten a lot is, early on, the ERTC, the tax credit plan versus the 8-week PPP was like a lot of my, restaurateurs would say, hey, I don't think the PPP works for me. I can't do it in 8 weeks. I'm not going to be back open. I'm going to go with the tax credit. And they've gone down that road, but obviously you're not able to do both. And some of the questions are, can I give that back and now apply for PPP? Because that's now with 24 weeks, 60-40, it's a whole different.
Right, it makes a lot more sense.
But,
so I would have to ask if you could kind of renege on that. It was no different than people giving the money back, the PPP money. The question becomes, did they originally apply for a PPP and give the money back, or they never applied? If they've never applied, then yeah, potentially might be an option. We would need to speak to. We have some expertise on the employee retention credit, and
okay.
I easily find that out. Just shoot me that, and I will definitely find that out for you. But if you had a situation where you applied for the PPP, you received a PPP, and then you said, you know what, this is just not going to work for me, I'm going to return the money, you cannot get another PPP unless you've done it under a different entity. So it's one per customer.
Gotcha. And that kind of answers another question at the top about they're not allowing people that have used the money to kind of go back in and double dip.
Not at this point in time.
Yeah.
It's interesting. There's a new, and I'm sure Scott, you're aware of it. There's a restaurant relief package.
Yep.
That is coming out. That is being proposed. It's not coming out. It's being proposed, and it's a $120 billion package. So I'm curious to see if they're going to repurpose some of this unused money and put it towards some of the other initiatives that some of the senators are putting forth.
Yeah.
Because there's been very little traction. Even though I will see a little bit of an uptick, I think. So I think there will be a little bit of an uptick in some, now that they're friendlier rules, but I still think a lot of the $130 million is most of it is still gonna sit, but we'll see.
Well, and I think for everyone that's listening in, kind of to Stephanie's point, there's been a lot of going on down in federal that we're working on about your industry, and obviously the PPP is going to help in the short term, but we know this is a long recovery road, and you're not going to get back to 100% capacity inside for at least a time period and getting back to any part of what you were doing pre-COVID. I know there's the 120 million that came out of a senator in Washington. I know the National Restaurant Association has recommended like 170. There's a lot of different plans out there. But I will say one of the positives, I'm sure you saw this too, Stephanie, Steve Mnuchin was in Politico last week saying that not just our industry, but industries that have been hit the hardest, restaurants, hotels, kind of hospitality world, like of looking at, instead of creating its own fund and an own grant program, they feel like the PPP program and maybe a double dip, allowing you guys to go back in, obviously no promises, but they understand how that program works. And they were like, and he even was quoted by saying, maybe that's the option we go after, is to say, if you've lost over 50, you'd have to show you had over 50% of your business had been lost. There's a lot of different pieces, but to have the head of Treasury in Politico kind of on his own, realize the dire situation you guys are in and saying, hey, it's great what we did initially. We got you 24 weeks, but there might need to be more on the horizon, I think is a continued push we're going to have. Nothing's promised right now, but the comments, and Steve Mnuchin said this to a lot of our restaurant leaders a couple of weeks ago, trying to create a whole new program might be really difficult, but if there's money left over in PPP or an influx of a way to look at industries like caterers and restaurants and hotels and museums and concert halls and things that literally haven't been open or haven't been able to open anywhere near full capacity, should maybe have an opportunity to get more help. And that's what we're going to continue to push. So I want to make sure you guys are aware of that from our side, that we're not going to stop pushing for that, because I do think this is a really good, to Stephanie's point, getting to 24 weeks, having a chance to have 60-40. Hopefully you guys, everyone on the call now has a chance to take your money and have it fully forgiven, or very close to that over the next 6 months or your 24-week period, and working with us and your bank, and obviously folks like Stephanie's team that can help you answer those questions. Because I will go back to, there is no other program, as much as it's not perfect, there's no other program out there that is forgiving dollars. There's the EIDL loan, which is a loan. There's the bridge loan in our state, which is a loan. There's the ERTC tax credit, which I guess you can look at that a little bit of getting money back without, what you're using. But this program is the only program that you really have a chance to get 2.5 times your payroll for the 2 months period, and use almost all of that money to help you get back on your feet, in the way that this new model is working. So I know there's still a lot of questions.
Yeah, I can.
But making
Yeah,
sure
I can answer. I'm fine with staying on a little longer if you're fine with doing that.
Yeah, go ahead.
Yeah. So, and I just want to let you know, so we as a firm, so, we're helping a lot of, our clients, and we've actually, a lot of people have reached out. A lot of people have reached out to us to help them with the forgiveness. So, with the application, to make sure that all their I's are dotted, their T's are crossed, and they're following the rules and regulations. So that is something that we are helping people do. And for larger companies that might have a board of directors, or they might have they might be owned by a private equity fund that received the money, that those companies, they might require what they call an AUP, which is an agreed upon procedure engagement, where there's something a little bit more formal. So we're providing that as well, if there's a need. So if there's, again, I know Don Stevens, who's part of our task force, co-leads with me. He knows you well, Scott, so he could provide that information. So if there's anybody that needs assistance,
Yes.
we can help. But let me ask. So I thought we answered. So please answer Jessica's questions on FTEs. What can you?
She has a new one. Yeah.
Oh,
So
okay.
my
Let me go. let me go up the chain here because I have this in front of me.
Yeah.
So Phil, I'm going to answer Philip's question. So Philip, with regard to the 8 weeks, right, the 15.3, that you were able to spend, 19.23 a week, for the same employees, can you spend, the 24 weeks, would it be the $46,000? Additional guidance for waiting on that, I'd like to believe because it is annualized over that $100,000 is annualized, so you are within the guidelines. The question becomes, all right, so if I'm able to all of a sudden pay these people 46 is 3 times as much as I was paying them before, am I going to have an issue on my FTEs? Bringing back the FTEs. But again, we'll see how that all kind of shakes out when we get that additional guidance. From Catherine, can we continue to use funds after 8-week period? Well, you have 24 weeks. So I think if you're talking about, can I use it after, like I've gone through the forgiveness provisions, and you have money there, then that's a question, that we're waiting on guidance on. Can you use the money for anything? Or, you would still have to continue to use it for payroll and, payroll utilities, mortgage interest and all that good stuff. Jessica, I guess is my FTE was a lower number with the more complicated method. All right, so the standard method is 4.9. Does that mean I have to bring back 4.9 at 40 hours, or can I bring back multiple part-time people? All of my employers are under 35, and as long as I meet the number of hours. All right, so the way you have to look at each individual employee, Jessica, so it's not, so cut and dry. And so you might want to also look at the simplified method. Because if you had to put all my employees are under 35, and so you might want to look at that. That might be a better fit for you. And the question becomes is whether, how are they going to determine on the FTE side? The cure will definitely, I'm assuming, is going to be, based upon weekly. But depending upon it, and it goes back to one of my original questions that we have for the Treasury is, suppose if you don't use that whole 24 weeks, you're taking an average of FTEs over a covered period of time. So depending upon when you bring people back, it's not like when you bring them back, it's over a 24-week period of time. So it's not so cut and dry, and you kind of have to model it out. But depending upon, again, the cure, you'd still need to get back to. You would still need to get back to your level, your level of FTEs that they were, unless again they're going to throw that out the door. So I'd rather talk offline with you, Jessica. Like, if you want to give me a call, have to discuss. Can the PPP amount used to pay for more than we talked about that?
Yeah,
Can
I think we answered
most
most of those questions above that one.
Okay, so we've
and I
answered
think
all
we're
those
good.
questions, and then I think. If there are state restrictions such as opening, are there exceptions being considered for repayment? That there aren't, that's what they did the 5 years for. They thought, that 5 years, extending it from 2 to 5 years would be, plenty of time, for 24 weeks for you to utilize the money. Obviously, some of you may not be able to utilize it even within that 24-week period of time because your personal, business situations, but they believe, that the money that's left, if there is money left over, that 5 years should be sufficient. So there's going to be no additional consideration as it stands today. Again, always have a conversation with your lenders. So, are the lenders going to require you to sign amended contracts? So there's definitely going to be amended, loans. For sure, because after you apply for forgiveness, because when you did the loans really just talked about, you have a loan, you actually have just a loan, a regular loan document. So with respect to just a regular loan document, that you'll get a new one after the forgiveness phase, because they actually put in loan amounts and they put in your amortization. So that obviously that amortization is going to change, and if you go to a 5-year amortization. So yeah, you will get some new loan documents once you have those discussions with your banks. I think we answered, I would like to know, one last question. I'd like to know if I can lay off salespeople now who had previously brought back after receiving the PPP money and continues to pay some other administrative staff. Yeah, if you might get dinged again by your FTEs, but if you're laying them off because there's really no purpose, of having them, then you got to do what's good. At the end of the day, you got to do what's good for your business, and really you shouldn't be privatizing. You shouldn't have to privatize unemployment for your state, for sure. I think we've answered. I
There's
mean,
a
I don't know
couple,
if there's-
there's a couple new ones at the bottom. Health insurance premium paid by the business is not covered.
It is
Correct?
covered. That's
It is
an
covered.
eligible payroll cost. Yes,
Okay.
that's an eligible payroll cost. I don't know if any of the people on the call are self-insured. If you're self-insured, it gets a little bit more complicated because of just the way you pay your claims. And that's, again, further guidance is needed on that, because I know you could be paying claims in April that go back a couple of months, and so it's not within your covered period. So would that be okay? There's also another way to look at it, fair market value of your premium that you're paying, that you should be paying, funding. So the self-insured are a little tricky, but yes, so health insurance is definitely covered. If we have high turnover, our new hires to be compared to other old staff for salary comparison. So yeah, so no, they are not. So if you hired somebody and they are a brand new hire, you didn't have them in first quarter, there is no comparison on their salary. It is whatever you're paying them is what you're paying them. It's only employees that you had prior to that you have to worry about that salary comparison. Is a restaurant relief bill or package you refer to being discussed on the state or national level? It is a national conversation. I'm sure every state is talking about it as well, but it's going to be something that's national. So the National Restaurant Association has been lobbying very hard, along with the James Beard, along the Independent Restaurant Coalition, along with a lot of different operators. So it's definitely a national. It's not something that's going to be state level. It's going to be a national relief bill. And there's a couple of senators that are championing it right now, and hopefully within the next couple of weeks. As you all know, they don't work very quickly.
And so everyone's, yeah, I think that's it. And I think we're kind of getting done. Just so everyone's aware too, on the federal side, we'll continue to keep you guys updated here from a state level on any movement to that. Obviously, we've been working hard to get these fixes in the PPP Flexibility Act. But also I'm working on a state level of trying to use some of the CARES Act COVID dollars. I've reached out to Commissioner Lehman and others to see if we can get creative, because as you guys know, with your PPP loan, you cannot use it for PPE expenses. And I know you guys, like we talked about the bar, non-porous barriers or masks or hand sanitizer or extra cleanings, all these things you're having to put into your business that you normally wouldn't have to in pre-COVID times. So I'm no promises right now, but we're doing two different things. On a state level, we're trying to see if we can find into that COVID money to go out there to help not just restaurants, but all businesses. And then on a federal level, in regards to PPE, we've also at the National Restaurant Association asked for a federal tax credit. So please make sure, and I'll reiterate this again, anything you're spending money on PPE, you're keeping track of it. No guarantee you're going to get anything back yet, but please keep track in a separate, hey, I spent this on masks, I spent this on cleaning, on barriers, on anything like signage, printing costs. Like keep a log of that, because I think it's going to be helpful as you go through this, because I know it's expenses you're incurring that you're not normally having to do. No promises right now, but obviously we as an association are working diligently trying to get some answers and trying to get some help in those areas, because obviously the PPE won't allow you can't use like the $5,000 in PPE expenses. You can't write that off and use that as forgiveness. So I'll keep everyone posted, but I'll make sure they're clear on that.
And before we get off, Scott, so Carolyn, she just hopped on a question, and yeah, you get to use the money over the 24 weeks period. Yeah, so and again, the 8 week, you could determine if you want just the original 8 weeks from when you got the money, which probably doesn't make sense for most. You can opt to use the original 8 weeks as well.
Perfect. Well, we've gotten over our time a little bit, but Stephanie, I really appreciate you staying on longer to answer questions. I'll have Yvette send out the group Stephanie's email if you guys have specific contact or questions. I know she talked about we didn't get to every single question. I know I got a lot of questions through email as well, but that's okay. I think to Stephanie's point at the beginning of this, we know that there's still more guidelines that need to come out, more guidance, FAQs, the loan forgiveness, all the things that really need to come come out to help you guys. But I would reiterate that you are talking, I'm hoping you're using CohnReznick, but you're talking with your accountants. You're also talking with your bank right now, just in constant communication about this new updates, making sure that you guys are using this money for the best of your ability to be forgiven, and trying to help answer any of your questions. I get it. I know the stress of trying to understand something new that got passed and everything else to make it work for you. I'm hopeful this new Flexibility Act is doing a lot of that. But at the same time, that's really why we put this together as well, is to make sure you guys got some guidance from an expert, and Stephanie, not just hearing it from myself or folks at National. So no, listen, we'll put this up on our webinar as well, and we'll make sure we'll get Stephanie's contact information. If you guys need anything, I don't have Stephanie's slide at the end with her contact, but obviously my email is there here at the top left, and obviously the rest of my staff. If you guys need anything, please don't hesitate to reach out. And we look forward to continuing more webinars. I look forward to Wednesday's reopening. And Stephanie, thank you so much again for your time.
Oh, you're welcome. Appreciate it. I just want to add one thing. I'd be remiss if for some, there's another program, the Main Street Lending Program, and that is open today with the banks. So if I don't know if you guys discussed it already, but it's another form of it's debt. It's additional debt. Then not really, but it's debt that's sort of palatable. So those anybody who wants more information on that, we could give you some guidance on that as well. For some of the bigger groups that might have been thinking about it, because I do have clients that are going to be pursuing it as well.
Sure. No, absolutely. I think we haven't gone into a lot of detail with it, but obviously knowing that program did launch. So I think it's just continuing conversation. We'll continue to update everybody. So thank you again, Stephanie, and to everyone else.
Welcome.
Enjoy the rest of this great weather we have here on a Monday and Tuesday. If you guys have any specific questions, please reach out to me on reopening on Wednesday. I look forward to getting out with some of the media and getting inside a lot of restaurants around the state and do a little bit of a tour on Wednesday. And I look forward to seeing some of you guys. So thanks again, and we'll talk soon.
Have a great day.